A $10 mistake is likely draining your future. It is a quiet, continuous error that most people never notice until it's too late. We are living through a modern trap. You put in the hours and grind through the week, yet your financial progress remains completely frozen in place. Escaping the cycle is usually presented as an impossible feat, requiring an executive salary, a lucky startup, or a massive inheritance. But the dividing line between the stagnant middle class and a self-made millionaire hinges entirely on what happens to a single $10 bill every day. Your ultimate financial destination relies on microscopic daily habits, executed silently over decades. Imagine two neighbors with the same commute, the same job title, and the exact same paycheck. The first neighbor routinely drops $10 on a drive-through meal or a subscription they rarely use. The second neighbor skips that convenience and routes that same $10 into an index fund holding the top 500 companies in the country. That decision plugs their money directly into the American stock market, a massive, grinding wealth-generating engine that runs in the background of society. On the surface, their lives look identical, but one is choosing temporary consumption, while the other is choosing systemic ownership. This ownership relies on compound interest, the mathematical act of money cloning itself. At the start of this process, a $10 investment generates a microscopic profit of just a few cents. Those newly created cents are immediately sent back to work alongside the original $10, generating even more cents in a recursive loop. This contrasts sharply with the $10 spent at the drive-thru. That money is permanently destroyed and incapable of ever generating value again. Through compounding, static cash becomes an automated workforce that pushes forward 24 hours a day. Moving across a 40-year timeline reveals the massive gap between the spender and the investor. In the first year, the divergence is subtle. The investor pulls ahead by only a few $1,000s, their trajectory nearly indistinguishable from their neighbors. By year 10, the mathematics begin to stretch. The investor's line curves upward, pushing them tens of thousands of dollars ahead of the spender. At year 30, the exponential curve shoots upward into a vertical climb. The spender's line remains flat, while the investor clears the $1 million mark. This staggering wealth gap was built on the mathematical certainty of the exponential curve. Every daily $10 purchase actually costs decades of future financial freedom. The American investment machine does not care about talent or luck. It strictly requires consistency and time cannot be recovered. Every day of delay permanently erases a chunk of exponential growth from your life. You are going to spend $10 today regardless of what you decide. You simply have to decide who gets to keep it.